Did you know that the vast majority of day traders lose money? That's right. Only a small percentage of people who attempt day trading actually turn a profit consistently. I was shocked when I learned this statistic, but I still wanted to see if I could beat the odds. Today, I'm sharing the high-risk world of day trading. Thanks again for joining the channel, Finance Inspector, and today we're diving deep into day trading for beginners. Day trading, the practice of buying and selling financial instruments within the same trading day, has exploded in popularity with commission-free trading platforms and the accessibility of market information online. Whether you're curious about day trading or considering trying it yourself, this honest breakdown will give you the unfiltered reality that most influencers won't share. Beginners face some serious hurdles. First, there's the overwhelming amount of information: chart patterns, technical indicators, fundamental analysis, and trading psychology. Then there's the technology aspect: choosing the right broker, setting up reliable charts, and creating a workspace that allows for quick decision-making. But perhaps the biggest challenges are invisible: managing risk effectively, controlling emotions during trades, and developing a sustainable strategy that fits your personality and schedule. Day trading isn't just about picking winning stocks, it's about surviving long enough to develop the skills needed to succeed. Many beginners jump in with unrealistic expectations, thinking they'll quickly replace their income or become overnight millionaires. The reality: day trading is one of the most challenging ways to make money in the markets, with a learning curve steeper than most professions. You began with intense research. Spend 3 months studying before placing a bet. Real trade. Consume as many books as possible on how to day trade. You will be surprised how many teaching aids are out there, watching countless YouTube tutorials on chart patterns and technical analysis. Joined trading communities to learn from experienced traders. During this phase, you will learn that successful day trading requires a solid understanding of technical analysis, a clearly defined trading strategy with specific entry and exit rules, risk management protocols that protect your capital, emotional discipline to follow your plan regardless of feelings. Invested in a dual monitor setup, a reliable internet connection, and ultimately chose a trading platform with low fees, fast execution, and a user-friendly platform. Day trading keyword tip. Your trading platform choice can significantly impact your success rate and execution quality. Before risking real money, paper traded for 6 weeks using a simulated account. This was invaluable. I tested different strategies and learned how to execute orders efficiently without the emotional pressure of real money on the line. My first week trading with real money was humbling, to say the least. Despite my preparation, I found myself making emotional decisions that contradicted my trading plan. I'd exit profitable trades too early out of fear, and hold losing trades too long, hoping for recovery. One of my first successful trades was on a technology stock that had a clear breakout pattern. I followed my plan perfectly, entered at the breakout point, set a tight stop loss, and took profits at my predetermined target. I made $175 in about 45 minutes. I felt invincible. The very next day I lost $320 on a similar setup because I ignored my stop loss when the trade went against me, convinced it would reverse. It didn't. This pattern of occasional wins followed by larger losses continued for weeks. Day trading for beginners often involves this painful learning curve, understanding that consistency comes from following your rules, not from hoping or guessing. After about 2 months of inconsistent results, I narrowed my focus to trading only one setup morning breakouts on stocks with high relative volume. By specializing instead of trying to trade everything, my results began to improve. I implemented a strict 1% risk per trade rule, meaning I would never risk more than 1% of my total trading capital on any single trade. This discipline protected me from significant drawdowns during losing streaks. I also started keeping a detailed trading journal documenting not just my entries and exits, but my emotional state, adherence to my plan, and notes about market conditions. This journal became my most valuable tool for improvement. The pivotal moment in my trading journey came about 4 months in. I had been having a reasonably good week, up about $600 across several trades. Then came an earnings announcement from a major tech company that beat all expectations. The stock was gapping up significantly pre-market, and I saw what looked like a perfect setup forming. Convinced this was a can't-lose opportunity, I broke my 1% risk rule and put nearly 5% of my account into this single trade. Initially, the trade worked beautifully. The stock continued climbing, and I was up over $1,200 in minutes, more than I had made in any single day before. Greed took over. Instead of taking profits according to my plan, I held on, convinced this would be my biggest winner yet. Within 15 minutes, the stock reversed sharply as institutional traders began taking profits. I froze, unable to execute my exit as planned. By the time I finally closed the position, my $1,200 gain had turned into a $970 loss. That day taught me the most valuable lesson in day trading. No matter how good a setup looks, risk management and emotional discipline are what separate successful traders from the 95% who fail. Breaking my own rules had cost me not just money, but confidence. After 6 months of active day trading, here's my honest assessment. Day trading is not the get-rich-quick scheme it's often portrayed as on social media. It's a legitimate skill that takes significant time, dedication, and psychological fortitude to develop. My key takeaways for beginners considering day trading: 1. Start with proper education and paper trading. Walking before running is crucial in this field. 2. Develop a specific trading strategy with clear rules that fits your personality and schedule. 3. Risk management is non-negotiable. Never risk more than you can afford to lose on a single trade. 4. Keep detailed records of your trades to identify patterns and areas for improvement. 5. Recognize that emotional control is often more important than technical analysis skills. 6. Be prepared for the reality that most beginners will lose money during their learning phase. In terms of my personal results, after 6 months I'm slightly profitable, up about 4% overall on my trading account. This is significantly better than the statistics would predict for a beginner, but far from the life-changing returns often promised by trading gurus online. Day trading can be a viable skill, but it requires treating it like a business or profession, not a gamble or lottery ticket. For most people, long-term investing strategies will produce better results with far less stress and time commitment. If you've tried day trading yourself, I'd love to hear about your experience in the comments below. What strategies worked for you? What lessons did you learn the hard way? If you found this honest breakdown helpful, please hit that like button and subscribe for more content on personal finance, investing, and wealth-building strategies that actually work. Remember, financial education is a journey, not a destination, and I'm committed to sharing both the wins and the losses along the way. Until next time, trade wisely and invest in your knowledge first.